Good morning, everyone. Welcome to the On Time, On Target Masterclass Investing with Military Precision. Today is Thursday, June 25th. Can you believe it's almost July already? And actually, when you think of June 25th, think of that as 3 months outside of that March 23rd low. So we've really been on our way up in the markets. And now we're kind of caught in that congestion, right, that we've seen before. So as far as what we're going to look at today, no new news on the podcast front, and no new episodes out. A couple more downloads. Didn't update that number yet, but I have 2 interviews today as far as the folks that are going to be part of the series release on the 1st, which is financial thought leaders within the industry. So pretty excited about that. As far as our objectives today, we're going to grow our money, protect our money, and live off our money. We're going to talk about preferred stocks, and preferred stocks are really right in between that protect your money and live off your money. Certainly when you're in the accumulation phase in life, you do not need to be in preferred stocks. Just you don't. But as far as if you are either trying to protect your money in a downturn or take some risk out of your portfolio because you're nearing retirement or in retirement, or if you're trying to live off your money, preferred stocks can be a good way to generate some income there. So as far as our flow, long, short, open, short, long. We'll do a market review around the world. We're going to look at our headlines for today's, which will pretty much be the jobs number that's out there. And then for long-term investments, those are all 6 of those are different ETFs. So index funds for preferreds. I'm not going to talk individual preferreds other than conceptually. I personally don't own any individual preferreds like I do individual bonds, but I do own PFF. And again, not a lot of it, but just enough to where it's a risk management tool, if you will. We'll take a look at any short day trading opportunities. The market's in the red, so maybe some shorts will set up for us, and then we will execute through the market open. Then we'll get to our question and answer session, as well as go to Investopedia and kind of get into the weeds a little bit on preferred stocks. If you're having any tech issues out there, steve@ototnow.com is where you need to reach out, and we will help you. And standard disclaimer, this is an educational brief. I do not know the specifics or of your personal situation. Okay, let's go up and look at where we've been in the TD Ameritrade screen. So again, left to right, it's 1 year. We had the big red up February, drop off in March, and 3 months since then now. As you can see recently, we're still in that channel up trade, even though yesterday's move was down almost, 3%. So just realize we have not broken that. We have not broken the channel. However, if today matches yesterday, then we certainly will have, and we'll be pretty close to knocking on the door of that 300 number. So again, nothing magical about that, except when you do exit a channel, you tend to continue in that direction for some time. So if we would break out of the channel to the downside, I would expect the market to continue to sell off. So even though we had a decent sell off yesterday, that's not uncommon for an up channel like that to sell off. That's almost reversion to the mean. However, there's been some more ugly headlines out, in particular the 8 states that I saw some charts this morning, and I'll do a video about it tonight about kind of the second wave and how it's all going to play out. But yeah, we could retrace back down into 270, 280, and really that's not even a real significant move. If you're dealing with big numbers, you'll think it's significant, but really from a market perspective, we can come in here and that's fine, and that would set the stage for going back higher. Okay, let's zoom in on the past few days there in the S&P 500. We'll kind of take a look at where we've been. So again, that's a Monday that we had the down day there, and then Tuesday was up, Wednesday kind of down, and then yesterday, I'm a day off there. So today being that being Wednesday on that chart, we had the big move down there initially and then kind of sideways and then on into today. So again, we could kind of go either way today. I don't know what good news headlines are going to be out. I think it's all going to be bad news from here, but we'll see. That's what keeps it interesting, right? All right, over to the earnings calendar. We had KB Homes last night was the big one that came out, and they crushed earnings as expected. This morning, ACN, we'll click on that. That's Accenture. They came out this morning, and yeah, did pretty well. So you would think from a business is in trouble, let's hire a consulting team. It's the if you really need them, you can't afford to hire them kind of thing. But I would imagine their business picking up. quite a bit as companies try to restructure, rebrand, pivot to the new work from home environment and what their future is going to look like. So again, Accenture's teams of experts that come in and help you resurrect or change your business, if you will. Okay, we'll go over to CNBC. We're going to go to the pre-market numbers first. Again, they're all in the red, so we'll refresh this, take a look at that. And there you go, almost to 1% down on the Dow. You see the Nasdaq's hardly really moved down at all. So again, those are our tech names. We'll take a look at Europe. Europe's about mixed. Over to Asia, kind of mixed. Japan's off over 1% there, and then Australia down 2%. That's in Korea. That's all the way off to the right. Those are both off 2%. Okay, let's look at the numbers from yesterday, which are kind of more instructive as far as everybody down across 2%. I think we touched almost 3% throughout the day. But if you look over the right at the VIX, and we talked about this yesterday, and if I remember later, we'll pull up the chart of the VXX. On a day where, you know, if you're in there trading the open, if that's your thing, once the market starts to sell off like that, it looks like it's setting up to be a big down day, which remember I kind of said about 20 minutes in, I could see the market just continuing to kind of sell off all day. That's when you get the VIX. You can just buy the VIX long. Again, VXX would be your tool to do that. Not really a day trade, but buy it, hold it through the day, and then let it do its thing. It spiked pretty good there for a while, and then kind of came back in towards the end of the day, if you remember what that looked like. Okay, over to bonds. Okay, not a whole lot of movement there. Oil. Again, we've broken down below that $40 a barrel. It's kind of the magic number there, and there hadn't been a whole lot of conversation in OPEC lately. Okay, and off into the precious metals. We know silver had the big almost 3% move down 2 days ago, so it kind of popped back up there yesterday, even though everything else kind of sold off. All right, back to the pre-market, and then we'll talk about some headlines that are out there. The first of which is going to be your jobless claims. Obviously, that came in at I believe it's close to 1.5 million when 1.3 something was expected. So again, more than expected. We'll find out the unemployment numbers tomorrow, which tell kind of a bigger story from there. All right, there's a lot more talking about that unemployment, that cliff that they're talking about in July 31st, and how the unemployment benefits drop significantly. So I would expect that our numbers are going to change for the better at that point, because people aren't going to want to hang out, you know, making a lot less on unemployment there. Coronavirus, the second wave. Again, there's 8 states that have basically are kind of targeted. Texas is one of them here as the states that have experienced a significant spike. And when you look at it from a chart perspective, and again, I'll make a video about this later today, it's pretty overwhelming, the numbers that you're seeing. And again, that's more testing. We had a little flash fire, if you will, in the volleyball world, where one of the local girls has it now, and everybody's kind of reacting as far as, do I need to get my family tested or not? How much exposure do I have or not? So it's getting real for pretty much a lot, I wouldn't say everybody, but a lot of people out there. All right. Let's scroll down a little bit. Apple Watch, again, if you've been following this from the beginning, it isn't just to be able to get your messages on your phone or manipulate your playlist on iTunes, but it's the health aspect. That's always been it's been a gateway into monitoring your body functions, almost like a real-time health monitor. So that's really where that's going. It's got fall protection now. So if you have some older folks you're worried about, if they fall a lot, again, it would give you if they fall down, you would actually get an alert as a third party, if that's set up, of course. However, you know, all the different things that it can actually collect on for you. So I think there's a lot of gains out there. So you'll see more on that. Okay, Mohamed El Orion, obviously a big player in the space there. He's saying, wait to put your cash to work. I think it's pretty smart right now. Either let what you have ride, pivot towards safety a little bit for long, or only go best of breed, right? You kind of can't lose with a best of breed investment philosophy. But if you have cash on the sidelines, I'm going to work it in, you know, I would work it in slowly into best of breed only here. All right, worst day since June 11th plunge. again, everything's been so bad. Up so far in 2020, we've set so many records. Those headlines are almost meaningless. Okay, let's go ahead and scroll up. Yeah, I didn't see the opinion piece there. That's probably Wall Street Journal, but no such thing as truly risk-free. Realize, yeah, if you go to cash, you're losing out to inflation. Inflation isn't bad right now, but are we setting up for a situation where inflation could be a lot worse? You're going to hear a lot more about that. I say no, not yet, because it didn't happen in the global financial crisis in 2007 through 2009, and we're doing pretty much all the same things across the board here. So I really don't see it as a huge threat yet, but realize, yeah, you're losing out. And I like to tell folks, I had this conversation last night. New client has a bunch of money in cash. It's like if you saw things back in a backward manner. So if you keep 100,000 in the bank and the bank turns around and invests that in things like preferred stock and bonds, and they get that 4.5 to 5.5%, they pay you a fraction of that. Just say it's 1%. So the difference there is about 3.5 to 4% over the course of a year. If you had to turn around and write that check to the bank for them to have the privilege of holding your money, you would never do it. You wouldn't have a dime in a bank. So just realize that I'm going to interview as part of my thought leadership series, a banker, and really get into the inside of, his side of it. And it's just like, how much are they making on deposits? It's going to be kind of crazy, I think. Okay. Macy's slashing 4,000 corporate jobs. It's surprising they have 4,000 to slash, and why haven't they done it already in these day and ages? So maybe Macy's is leaping forward into the 90s or maybe even the 21st century. Okay, Chuck E. Cheese parent files for bankruptcy. Could have gotten rid of that place years ago. All right, let's continue down into this area as far as, yep, more and more political stuff is going to come out. Five Below is that's the last thing I'll talk about. Five Below, again, a discounter. They're a company that's poised to benefit as, in a recession, pandemic, negative news, money's a little bit tight. Folks like to go out into the discounters and get their stuff a lot cheaper. Okay, we'll get rid of that and we will go up to Schwab and take a look at our preferred stocks. Again, all of these are actually ETFs. So it's hard not to go any further without explaining what a preferred stock is. So if you think of the hierarchy, there's common stocks, which is what sells. They IPO and they sell in the markets on a secondary exchange. That is a common stock. There are bonds. That's straight debt. That's where a company borrows money from you and me and everybody else who wants to loan them money. And that's their debt portion. In between the equity portion, common stocks, and the debt portion, relies what I would call a financial engineering instrument called a preferred stock. So it is a stock, but it acts like a bond. So what say you about this nonsense? Well, they're hard to understand, but it pays out a dividend, and that's why you see the D's up there paying out monthly across the board. So it pays out regularly like a monthly dividend payer. However, the stock price generally does not move from a par price. It has a par like a bond does. Bonds generally par at 1,000, preferred stocks par at $25. So stock price doesn't move a whole lot, but it pays out that dividend. And when you think of companies running into trouble, as far as there's the common dividends, first of all, when a company at the end of each month or quarter, when they go to pay out these things, the debt holders get paid first, always. And then following that, you pay out your preferreds dividend. And then after that, you pay out your common stock dividend. So in the case of Ford, where they've said, okay, we're getting rid of our dividend, I would have to go look, and I didn't, to see if they're still paying their preferreds. And of course, they're paying off their debt, which is their bonds, because if they didn't, that would crater the company. So bonds are paying in, and I do have Ford bonds out there. I don't know if the Ford preferreds are paying, but in that case, it's a deferred accumulation, where in Ford's situation, if they are if they're not paying the dividend, and then all of a sudden they start paying the dividend again in Ford, it just picks up at that point. With a preferred stock, you get all of the back pay for all of the dividends that they didn't pay you during that time. So just realize that that's how that works. If you're holding the preferred shares of Ford, then you're going to get those dividends. You're just going to get them at a later time. So a little bit confusing. We'll go through the Investopedia page later. So when you look at this, you look at, when life was good going into February, these didn't move a whole lot. So again, and the funds just pay out monthly. But then they got hit hard, as you see it go in the upper left there, PFF from around 38 all the way down to touching 24. So again, that's pretty much the full market sell-off of that 35%. And then it bounces from there all the way to up where we are now. And I would say that's probably where it would just stabilize. I see the question in there, and from Predator, I do want to address that now. No preferreds have voting rights. Those are all, you're talking a Class A, Class B type of shares, in which it was kind of the death of Under Armour, to be honest, when they did that. It was just too much of a shenanigan. Facebook was going to do it and then killed it and didn't. Google did it. That's why you have GOOG and GOOGL. Dumb, literally financial engineering. So think dumbest thing ever. But we'll come back to that more later. So the ones you can look up here, really the first 5 are basically the same instrument run by different companies. So not a whole lot of difference there. I consider PFF best of breed. All of these are going to run you about 0.5% of expense ratio for the privilege of having to do this for you. The bottom right one though is IPFF, which actually gives you the international exposure. If you want that, I would say there's more risk in the international right now than there is stateside, and it's been that way for a long time, a decade. But if you want international exposure, or if you're going under a true diversified model to where, yes, you want a piece of everything out there, then you would want a piece of the IPFF in your portfolio, so you have exposure to that. I don't value that right now. Okay, let's go over to the tabs and we'll start looking short as well as long. Some of the names that were in the headlines earlier today, let's look at DRI, which is Darden Restaurants. I didn't speak about it during the headline review, but this is the parent of Olive Garden and a couple other restaurants that are out there. So they had earnings out. It looks like they are gapping up. Obviously they did beat on, I say beats by 40% revenue in line. So they had a good earnings release. So again, gapping up 3% there. And with a lot of projection as far as, hey, if they're able to make money now, once they fill out the restaurants a little bit, can they make even more and climb back up? It looks a little oversold there, down in 70s. It was up in the 90s, 12 days ago or so. I actually ate at an Olive Garden Tuesday. So everything is the same, still delicious. Obviously, there was a lot more social distancing going on. Another name that was in the news was Rite Aid, R-A-D. So that is, again, think corner drugstore. Think people don't want to go to the big box Targets and H-E-Bs, Albertsons, that sort of thing. So they'd rather pay more to go to the corner store. So CVS, Walgreens, Boots Alliance, again, that was a merger, and then Rite Aid are kind of your big 3 in the corner store space. So pretty big gap there. Closed at 12.8, up at 14.5. So again, 8-9% is what we're looking at there. So we'll keep an eye on that long. Not in love with a long there with the market going short, but certainly a good news story. And then MKC will be the next one that we'll put in there. McCormick, they had beat earnings, and they're gapping up a little bit. So 172 up to 175. Not a whole lot to see there. Again, big spice company. We'll put in, all right, I saw some pop in, BA short. Let's just take a look at BA. Stocks on the move, 176 down to 169. So again, looks like that's 3-4% or so. Kind of reviewing the headlines here. Don't particularly see why Boeing's on the way down, but we'll put it on the list. If you have insight, Predator, go ahead and type that in. Let's look at KB Homes, KBH. So they're selling off pretty hard. Closed at 33 and down at 28 right now. Again, they crushed earnings. So I think Lennar did the same thing. They beat earnings and then sold off. So that would be a short story. I'm not too enthused about taking it, even though it's in the heart of the window. Click on gapping down there, see what else comes up here. So gap, KBH, that's 15% on that gap down. Let's look at NG. I'm not familiar with what NG is. Nova Gold, yeah, I am. I wouldn't touch that. It's not going to have the volume. And then BB is down 7%. Let's take a look at BB. Is BlackBerry, huh? It's got the volume. 492, 464, disappointing earnings. I thought BlackBerry was like BBY. Maybe it's different, obviously. So we'll take a look at BlackBerry short. I mean, who carries one of those anymore, right? And I like that $5 price point, so you can use that 10 points stop from there. So may take a look at that myself. Let's take a look at Workhorse Long, WKH. Ally, well, you have it up there, is fine. Ally Financial, gapping up a little bit on Ally and CardWorks are terminating a merger. So yeah, it's the CardWorks has been the German firm that is basically cratering. So I kind of like that story. So we'll take a look at Ally Long. Let's see. Yep. Click on Workhorse. Okay, this stock again. I'm in it now. It's more people are looking at it. It's getting a lot of eyeballs now. So 850 gapping up to 9. I could see that continuing on up. I went to their website this morning actually and looked at they have contracts with FedEx, UPS, and actually tomorrow I took a screenshot because that's something we talk tomorrow so we'll specifically talk Workhorse, and we'll talk about the logistics companies for our investing theme tomorrow. You know, UPS, DHL, Ryder, FedEx, and Workhorse is that last mile, right? That's not cost effective for anybody. It's not cost effective for Amazon when they ship, or any of those other names. Is they want to get it to a central location. They prefer to have a drop box and you come pick it up. But people who want it delivered to their door, the drone delivery thing is going to happen, and Workhorse is your company for that. The market cap on this thing, I think, is still so small, which is why a whole bunch of money is flowing into it. So I do like it as a long theme. Okay, let's go around the tabs. All right. Bio, Sorrento, American Airlines gapping down on volume. You could see that. There's cruise lines down there. Again, I think CCL is probably your best play. It would be a CCL short. Again, biased. I just did that yesterday, but I think it's got more room to run to the downside. There's your Workhorse numbers gapping up at 6%. So it's kind of hard of the envelope. Let's go to the next slide. Okay, there's DGAS again. That's the inverse natural gas triple levered ETF. I'm back out of UGAS. UGAS and DGAS are getting delisted, so they're going to go away here in a couple weeks. I don't remember the exact date. Credit Suisse is the parent of those. They're exchange traded notes. So remember, with an exchange traded note, different from an exchange traded fund, like we talked about maybe Monday or so, exchange traded note is where a bank buys all this stuff like Credit Suisse and then issues it out. So it's not as pure as an ETF. Those are going away. I do believe there's a long-term thesis for natural gas, so I'll be going to UNG. We'll put UNG in here in the left, just so you can see this chart. Complete house of pain, right? This is a more pure play. So down at 972, it's even gapping down, if you will. So that's the big sell-off in natural gas. Historic lows. I like buying things at historic lows. Not for day trade, but for a long-term trade. Okay. NVIDIA, nope, barely moving. Does have the volume though. Okay, let's look at the decliners tab. KBH has the volume. They've been hit hard. I don't think that has more downside. If I were a fill the gapper, I'd be targeting that. Boeing does 4%. Again, I don't remember the headline again of what's causing that, but Boeing has been surely selling off. I have it down to follow, but I'm not necessarily going to pull it up on the screen. All right, let's look at the next tab. There's the Rite Aid gapping up. Again, that's a long. It's already on my sheet. There's Ally, which you said you were taking, right? I see the natural gas comment. Ally long 10-cent stop. Yeah, good price point to do that with a dollar single digit stock. Brandywine gapping up, Accenture gapping up. I wouldn't touch either of those really in a with the market selling off, even though the SPY did move up significantly while we've been talking here. So we'll check that before we go over to the market. Let's check the last tab. Inovio gapping up again. Workhorse we talked about. Oh, I hate to go long, but boy, that workhorse long is setting up so beautifully. All right, I'll have to think about that some more. Let's go over to our new screen and I'll explain that to you while I look at my trades. Okay, what you have here is the left-hand screen is the SPY. That's not going to change. That is literally just going to sit there. We're not going to zoom in or anything. It's sitting there so you can see any big moves in the market. Also, let's see across the top. Let's put a Predator in there first on the left. Put BB in the middle and then put WKHS on the right. And I'm going to look at BB short. Little sparse on the volume. Yep, leave it there for a second. All right, figuring out where my stop is and whether 10 cents is enough. I think it is. I kind of like how it's backed up. So I will take, if you can type this in for me, BB short. 10 cents. In at 2. Out at 20. I just don't see this backing up at all. All right, we have 3 minutes to go. Workhorse, I don't like that move up right there pre-market. Gosh, that's moved, well, it's not bad. That's only 30 cents. It kind of looks larger than that. If you're going to take Workhorse long, though, you're going to have to give that probably a 40-cent stop. So manage that as you will if you're interested in Workhorse long. All right, I see another player just showed up. So again, we've got another couple minutes here before the market opens to get your trades in. So looking at Predator's got Ally long 10-cent stop in at 2 out at 10. I'm also in at 2 with Blackberry short in the middle, and then Workhorse would be my next favorite looking long there. But again, that's going to be at least a 40-cent stop or so. Other things we'll watch is that Darden DRI long, RAD long. Let's look. Yeah, pull up RAD in the right side. Got it. All right. Yeah, that's kind of tough for a long. And then the Boeing is another thing we looked at just to check the setup. So let's look Boeing on the right side. Again, Boeing will be a short. It's actually setting up kind of nicely for a short, so it'd be kind of interesting. Okay, let's see LK popping up there. Our favorite. Let's go LK in the right-hand screen. Short. Paper dart throw. Okay. Yeah, I would not think it's a short story. In at the open, now to 10. All right. We shall see. You might consider holding that for a little bit less, but it's up to you. But we're looking at 30 seconds to the open. I don't think you'll hear the bell since I have AirPods on no matter what we do now, but we'll set it up there. So the first one we'll be drawing on will be LK. Again, I'll be short with the 10-cent stop, but 10-cent stop's definitely appropriate down at this price point, and we'll see how it goes from there. Looking at the market on another screen, just refreshing that right before the bell goes off. Yeah, it's up to NASDAQ's basically even. So there's our bell. We'll get the entry point there at 308 for Luckin. Again, I wish you all the best in your trade, but I also hope that screams higher from a personal perspective. So, yep, 308. This is a short story, so it gets stopped out at 318, which is off the chart. And again, 1R would be down at 298. So if you just want to put a little tick maybe at 298 to show you that where is the 1R point. Okay. So the big bar there on Luckin is the entry point, and the small bar is the 1R if it works. All right, look at BlackBerry selling off pretty hard. Again, that'll be short, so I like that move up there. That'll work in my direction. Then we're looking at Ally long. So again, that move down is working there. All right. 1 minute, excuse me, 1 minute's now behind us, so things are looking good for our trades. LK slightly in the red. And Burner, since you joined us a little bit late after I talked about this screen, this is our new screen. All the way to the left is the SPY. We're not going to manipulate that chart as far as zooming in or zooming out or anything. Which is there so you can kind of see. You would always have that up in a day trading situation if you see the SPY start to swipe in one direction or the other. Generally, that's a headline or somebody started talking, and we go from there. All right, waiting on the other two to open here at 8:32. So the next bar, we'll focus on the entry for Ally first. Once this minute closes out. Okay, there's our entry for Ally at 1997. So you can draw a line there. Again, we're going long 40-cent stop. So 1947 is way off the screen. So we don't need to draw it there. And we'll catch my entry for BB short is at 474. So we'll go ahead and draw my entry at 474 in the middle pane there. All right, and again, I'm taking that short. So my 10R would basically, or excuse me, my R would be at the top of the screen, and then my 1R is at 10 cents, 464 from there. Okay, Ally does have a 10-cent stop. For some reason, I'm thinking that was a 40-cent stop. So good job there, putting that up. So the 10-cent stop to the bottom is that 1987. So it's going to need to have to hold right here. But it's flopping around. So that was kind of a good tick for you. And then to go long, the 3R point adding 30 cents to 97 would be 2027. So we can get that drawn in there for our 3R trade. All right, going to the Luckin's working up about 0.8R at this point in time. BlackBerry is working to the downside. So we can get my 3R point, I think, drawn in there for 44. You can just draw 448 down at the bottom. That would be my 3Rs for 3R-ish. 2.8-ish, again, was what I'm going for the BlackBerry in the middle. All right, so all three trades are in. Probably Ally's looking the best, even though Luckin's pretty good. Okay, on another screen, I'm refreshing the market to see how we're looking there. Okay, NASDAQ barely hanging in the red. Dow's down a little over 100 points. No major headlines other than the worse than expected jobless claims. All right, we'll keep your trades up. We'll look at, if I was going to take BlackBerry, I would still take BlackBerry here short. That's got a nice setup. Yeah, looks like a good entry on Ally for the long, nice green bars there. We'll manipulate the middle chart and we'll kind of look around a little bit. DRI, so what we'll take a look again. This was Darden Restaurants. This was a long play. So it's up at that 5% point. Not in love with the restaurant long for sure. and don't really like the setup. That would be setting up for more towards a short where you see that inverse check mark there. So don't need to look at that anymore. Next one is RAD long. Again, this is Rite Aid on the corner store situation. So move up, move down. Yeah. It's already moved up 6%. So yeah, if you didn't catch the entry there, I don't know that I could have taken it down at that 1420 point. I'd probably been into it at maybe 1435, 1440, but I just don't think it's got 3 hours to the upside. It's already up 13%. So I wouldn't try to get in on Rite Aid on a delayed entry at all. Okay, Boeing BA is the next one to look at. Again, this was a short. Again, not much of a headline. So if there's a headline for Boeing going short, you're looking at a decent entry here, where it's kind of all that congestion up at the 171 point. It keeps topping out there. So when you see things topping out in the same area, that generally means there's a big seller there right around that kind of time frame. But I don't know. I love Boeing as a long. So even though it's been beat up significantly lately, I wouldn't want to get behind that at all with my money on a day trade scenario. All right, refreshing allies, kind of working towards an R, and again about half R for LK. So good job on those. We'll check mine later. Ally was a long AL. Nope, we got Ally on the left there. Workhorse is next one we'll take a look at. WKHS. This could go either way. If you were convinced that the money's going to flow in, I do like the setup. You could enter at either a real or a paper trade. You could enter it around, if it holds 905 here and goes back green, you could enter here with your stop down at basically $9. But if it doesn't hold it here, then I wouldn't do it. So it didn't hold it. So you don't really have that entry. Look at the move down and Luckin. Boom, almost a 2R. That's one of these where when I was trading, that's where you would see your P&L explode, is on a stripe like that. So you would have, no kidding, it sitting off to the right, and you'd always have that, even if you had your trade tickets all set up, several throughout, and kind of in your whatever you have them set up to queue. But boom, you see something like that, and you can see your P&L just explode. A lot of people hit the auto sell when they see it explode like that. But I would say hold out for 3R, since that was your thesis. Since you're truly on a dart throw, might consider exiting, but it's up to you. All right, out at 10. Everybody's out at 10, so we got 3 more minutes before people are out. So yeah, Workhorse, I wouldn't turn around and take this long here. That's just too much red in the first opening few minutes. Check some other things like CCL. Buying into the cruise liners, huh? Don't see that. Let's take a look at another one. Let's look at RCL and see if it's following the same pattern. Okay, then let's look at AAL, switch into an airliner. Okay, all those are kind of moving up. That's when I talk about the setting up for a short, and you have all that congestion at 1266. So remember, that's every time the stock goes up and hits that, that's selling off for the past 6 minutes. So what does that look like? There could be a big seller there who has a limit order in at 1266. And that's what causes that. You hit a level, you sell off. You hit a level, you sell off. So that's setting up for a good short, if you will. And if you were to take it, you'd take it around about 1257. When it breaks through the congestion to the downside, if it does, you would be set up. So, okay, I'll take it at 1257, then put a stop at basically a 10-cent point above. So again, that's what I'd be watching real time, whether it's a paper trade, or a real trade. I'd have my eyes kept on that as long. Two contingencies. 1266 has the hold, so you have that protection there, and then it has to drop below 1257 before you would actually take it. So I'm going to watch that here for a second. There, it clipped above its 1266 level, so that means you would not enter this trade, but that's what you'd be looking for. That means the 1266 buyer that was sitting there has now been exhausted. So if that was a big buyer with 10,000 shares or 100,000 shares, now since it hit that level, that buyer's not there anymore. They either withdrew their bids or they filled, is what's likely is that level. So we won't be touching any of the airlines or cruise lines, anything like that. Okay, It looks on the left-hand chart that we did hit 3R on Ally, so you would be out of that trade, so that would be good. We're waiting for one more minute. Basically, once we close out the 840 minute, you'll be closed on that trade, so that's working nicely. Let's check back in on the middle screen for BlackBerry, BB, and again, that's a short play. And 10 cents up to 484, so I'm in the trade, but hating life, right? So it's still alive. Luckin's down at a 1.8R or so. Each of those little blocks is a 0.2R, so 1.6R, I guess, on Luckin. And Luckin's out at 10, so both the left and right trade will close here. So it looks like it's gonna be pretty close. Looks like it's gonna be pretty close if where it is right now. We'll score Luckin first because that's easier because we have the boxes right there to help us with the math. And then we'll come back to the left side. So that one closed out at 2. Luckin closed out at 2.9. We'll give you a DEMP 291. So that is a 1.9R trade. 1, 2, 3, 4. No, I'm sorry, 1.75R trade for burner. All right, and 20.1, 2010 or 2009 minus the entry point of, was it 1997. That's 12 cent total move. So it was 10 cents, right? So that's a 1.2R. So burner wins with the 1.75R trade, and pretty close there with a 1.2R for Predator. So that worked. Mine's in the red. I've got another 10 minutes before, and we'll see if that comes down. It certainly is not sold off at all. I do kind of like the entry point, but I would like it if I was shorting it here. So if you wanted to short something real time, shorten BlackBerry, if it'd have to drop down to about 478, and then you would give it basically a 7 cent stop to take it up to 485. So if you were to take a delayed into BlackBerry, I wouldn't mind that. So boom, I would enter there and a 485 stop. You do have the SPY kind of selling off pretty hard. So again, that's going to help out the shorts. So it'd help Luckin if you stayed in that trade. It would not help Ally from there. And of course, it would help BlackBerry if you set up on it. All right, I'm gonna check the notes real quick. Minus R on Workhorse. Okay, you got stopped out on Workhorse and BA. So for the Predator, and then just took the 2R to be near break even. Yeah, you saw it did give you 3 if you would have been a little more patient, or maybe you didn't sell at 3 and then took it on the downside. But yeah, it's already back in the red. So I wasn't excited about the Ally thesis. I'm not excited about the Luckin thesis either. What I'm most excited about, obviously, since I took it, is the BlackBerry. But obviously, it hasn't worked for me yet. It would need to strike down significantly for me to beat the 1.7R mark that Burners put there. But maybe the market will help us. Let's go ahead and take a look at the longer theme. So we're going to, again, switch out of this chart to a, yeah, that one. So here's our 5-day SPY. We'll go ahead and zoom that into a 1 minute so we can watch the today. And then we'll talk about our names off to the left. Okay, so there you can see the big move down. Let's look at who's up. So not a lot of names in the green here, right? So, and the ones that are just barely in the green. So when you know on the main screen, if the bottom half of it's red, that's not good. So I'm not even gonna talk about any of those. Let's look at what's on the pain train in the red today. Okay, options across the board. Luckin leading the individual stocks to the, I'm sorry, BOSQF, that's the psychedelic, then Luckin at 5% down. Boeing at 3%. Deltas, well, there's the airlines. You have Disney in there. Disney delayed. They were going to open up, I think it was July 15th across the board. Not across the board. The 2 big ones, Disneyland, Disney World, they've delayed that indefinitely now. So that's going to hit the stock a little bit. So again, things aren't moving down. You know, there's DraftKings with 6.5%. Go ahead and put DraftKings in the main screen. I think that'll take it below 35 or maybe close to 35. Yeah, so there's your short. 37 down to 35 for DraftKings. Again, don't care that much because most of our entries were in the teens on that, but certainly seeing some profit taking there. Okay, we can put the SPY back in, put the green back on the left, and we can go back to our trades. Okay, barely hanging on and from getting stopped out in BlackBerry, so we shall see. All right, let's talk about preferred stock investing. We're going to switch over to the Investopedia screen and talk in a little bit in detail about this. Okay, I'm going to go through this a little bit slow for you because it can be confusing. It is truly a financial instrument because everybody kind of understands debt is borrowing money, equity is part ownership of the company. So how can I be in the tweener, right? And that's exactly where the preferred stock lives. So it shares the characteristics of both. Some people call it a hybrid. I would agree. Let's go down to, we'll put Y preferreds at the top and get to that next. So institutions buy these, and probably that bullet there below the number 2, where it says tend to invest in preferred stock for institutions, is they get a tax break for it. So when you look at that, they exclude 70% of their dividend income if you're an institution. You holding it do not get that same break. So it's kind of like what? So that's why it gives the institutions who want to hold nice fixed income sort of products that pay out regularly, because they're not targeting 10 to 12% like you or I are looking for a long-term average return of that kind of. They're looking at more of the endowment type stuff of a 6 or 7% to fund their pensions and other things like that. So much a different type of investing from what you and I are used to. Okay, let's go. We'll put types of preferred stock at the top. That cumulative, that was what I was talking about. If their dividend gets suspended, it's just going to sit there and you're going to get that money. You're just going to get it later. Like if you've ever been working for the government, when the government shuts down, that's kind of how you get paid. Is you're going to get your pay. You're going to get all of it. You're just going to get it when the government opens back up. Okay, the next one's callable. So what in the world would that mean? How can a stock be callable? Well, unlike a bond that's issued on a day and it has a maturity date, and some of them have the option for the company to pay it off early, just like you would pay off a mortgage early or any loan. Stroke a check, you're done with it, right? Pay the payoff amount. Well, not so in preferred stocks. They're in place forever unless there's a callable option, but they can retire their preferreds by buying them back. And again, you don't have any choice in it. With the individual stock, if they want to try to buy you out of your stock, like DraftKings, the previous company owner, Diamond Eagle, and you may have seen this, you got in the mail a couple times a tender offer to buy the stock, take it off your hands at $11. Yeah, good thing you didn't take that, right? That's like, generally, if a company wants to buy back the stock, they know something you don't. You need to take the stock buyback offer, find the shredder, and shred that. That's actually a very good sign if the company's trying to buy their stock back from you. Okay, convertible. There is a way for the company to convert your preferred shares into actual equity. I have not seen that happen a whole lot, so I don't know how often that happens, but it's nice for them to have that stock that they have the security that's kind of in the middle there. So I don't know why they would do that. Okay, participating means, again, your stock price could appreciate. Most of them just hang around the $25 mark, but so I won't even talk to that. If obviously the company, say it's an Apple preferred, or Ford, since we use that. So say Ford goes screaming higher from $6 to $7 over 10, the preferred stock's barely going to move. So that could upset you if you think you're getting the best of both worlds and find out you're missing out on all of that upside. Okay, let's go down to similarities between bonds. You have interest rate sensitivity. Obviously, interest rates have nowhere to go but up, but they aren't going there anytime soon. But if you had a preferred stock and interest rates go up, your preferred stock's going to be worth less. For the same reason a bond is worth less, is because they could buy that back and reissue new ones at a higher level. So callability, we talked about. Senior securities is that payout schedule. So senior to common stock. So we talked about the dividend. If the dividend pays out, if they, you pay your debt first, and then you pay pay your preferreds, excuse me, and then you pay your common stock dividend. Same thing if a company goes bankrupt, you would see the debt holders get paid first, and then the preferred, if there's any money left over after they liquidate everything, then you would pay your preferreds off next, and then the common stock is just literally going to go to zero, which is where generally common stocks do, like Hertz. We'll check back on that before we leave. Okay, and I think that is enough on, you can see it does continue there for a while. So let's go to the main screen. We're going to close out my trade at the end of this minute. So we have a BlackBerry there in the middle. I'll get wherever this bar closes out. That's going to be in the red most assuredly, and it won't be near the 1.75R mark that Burner set. So congrats to Burner for winning the daily day trading challenge. Another free month in the room added to your list. You'll see that here shortly. And in the middle, let's go to Hertz, HTZ. Again, there's a stock that legitimately could be worth zero. I still think day traders are probably in this regularly, trying to catch the move down. Again, when you think of setups, you would not take it out of the gate. That's way too risky, and you would not like the way it went. But after it did pop up to 198, that's not a bad setup for going short. I'm not sure I would have taken that there, so I'm not saying, epic call time, but the certainly a good setup. Chesapeake is another company we looked at, CHK, for going out of business, and people are buying that. That's crazy. And then AMC is the last one we'll look at. There you go. So there's one that fell off a cliff. You wouldn't really take it at the open, but after some congestion in the 450 to 455 range, that's a 5-cent range, and hangs out there. If you took a stab at it somewhere in there, you would have certainly, that's a 3R move all day long. And, I think it's going to continue to sell off. I mean, who wants to own movie theaters here? All right. So that's what I've got. Good job on the trades today. Yours both worked. Mine did not. And we will see you back tomorrow morning for Friday. Talk to you then. Bye.